Imagine paying no tax on your retirement income. Sound too good to be true? In this video podcast, I'm going to be going over a tax hack that's essential for all locum professionals to know about, and it's the Backdoor Roth IRA. What is it? A Backdoor Roth IRA is a strategy that allows individuals with high income who exceed the IRS limits for direct Roth IRA contributions to still contribute to a Roth IRA using a legal workaround. Welcome to the Locum CPA Podcast. My name is Stephen Lee, a CPA based out of Chicago, Illinois. This podcast is dedicated to all locum medical professionals and how to accelerate your financial goals. So today we'll be talking about the Backdoor Roth IRA and how it's such a powerful strategy to plan for your retirement. This strategy is particularly useful for not only medical professionals, but all high income earners who want to take advantage of tax-free growth and the potential of a Roth IRA. Many of my clients, actually most of my clients, all participate in Roth IRAs in some form. And typically it's the backdoor method, right? Because their incomes are too high based on the IRS limits to do a direct Roth IRA contribution. So they have to do a legal workaround called the Backdoor Roth IRA. In this video, I'm going to talk about the steps to setting up a Backdoor Roth IRA and how it is. It's fairly straightforward and pretty easy to do. Step one is to contribute to a traditional IRA. Once again, step one is to contribute to a traditional IRA. So how does that work? You open up a traditional IRA account if you don't already have one, and you make a non-deductible contribution to that traditional IRA. The limit for 2025 is $7,000 if you're under the age of 50, and it's $8,000 if you're age 50 or older. Once again, $7,000 is the max for a IRA contribution. So once again, we're contributing as a non-deductible contribution, and you want to make sure that you're not claiming a tax deduction when you file your taxes for 2025. Remember, $7,000 or $8,000 if you're 50 years and older. Step two is to wait for a short period of time. This is probably usually a few days, and you want that contribution to the traditional IRA to clear so that even though there's no official waiting period, most advisors, and I agree, that you want to wait just a few days for that contribution to clear. And then step number three, you convert to a Roth IRA. That's when you tell your brokerage account or your financial advisor that you want to convert from a traditional IRA into the Roth IRA, which is a different type of plan. You might need to fill out a conversion form or follow the online instructions from the brokerage account. Step four is pay taxes if applicable. And if there are any earnings on the contribution between the time you made it into a traditional IRA and before it was converted to a Roth, you may need to pay taxes on the earnings. But typically, because you're doing it right away or within a few days, there really isn't much earnings, so don't worry about that. And it's ideal to perform the conversion quickly to minimize the case of potential earnings and taxable earnings. Step five is to report on your tax return. You're going to use the IRS Form 8606 to report that you made a contribution to an IRA, as well as you converted that into a Roth IRA. So the Form 8606 is a form you don't want to forget, and you're going to report for 2025 or 2026. It depends on when you made that contribution and that conversion. There are a few key considerations to think about before you do the Backdoor Roth strategy. There's something called the pro rata rule. The pro rata rule is something that can sometimes trip up some locum professionals. And that's if you have any other traditional IRAs, including rollover IRAs, the IRA uses this pro rata rule or formula when calculating taxes. And this can really complicate the process. So you really want to talk to your tax professional, CPA, or your financial advisor on what this pro rata rule and does it apply to you. And once again, it applies if you have existing IRA accounts, okay? The second is contribution limits. You always want to confirm what are the contribution limits and the income thresholds per IRS guidelines. There could be a year where your income is below that threshold and you don't need to do this workaround where you can just directly contribute to the Roth IRA. But most of you locum professionals are usually going to be higher or above that income threshold, and you need this legal work on. But make sure you're not only double checking the income thresholds in the year that you're making this backdoor Roth conversion or contribution, but also what is the contribution limit, right? Once again, for 2025, it's $7,000 for those that are under the age of 50 and $8,000 for those that are 50 and above. And once again, there are no income limits for conversions. The Roth IRA conversion process does not have income limits, which makes the backdoor strategy so great for high earners, right? So whether you're earning $500,000, $1 million, $10 million, you can do this backdoor Roth strategy. And what are the benefits of a backdoor Roth? It's all about the tax-free growth on the investments. So because this is made with after-tax dollars, or you don't get a contribution or a deduction for the contribution like you do with a traditional IRA, that income or that pool of money continues to grow tax-free. And even when you pull it out during retirement, it's tax-free. So that's what it's all about, really mixing, and having that tax-free income during retirement. Also, there's something called the required minimum distributions, or RMDs, once you hit a certain age, that the IRS requires you to pull money out, required minimum distributions, each and every year. But with Roth IRAs or post-tax money that grows tax-free, there is no RMD requirement. It's only on the income that you contributed that you got a deduction or that's growing pre-tax. Okay, so with Roth IRAs, it's great. There's no RMDs. And the last one is the potential tax savings. Because the contributions are made tax-free, once again, the earnings and the qualified withdrawals are going to be tax-free during your retirement. So you really want to leverage this backdoor Roth IRA strategy. Wherever you are in your locums career or your medical career, you want to look into the backdoor Roth IRA. And if you found this video podcast helpful, don't forget to like, subscribe, and to turn on your notifications. And don't forget also to share with some of your other locum colleagues on these videos, these podcasts. I hope that your 2025 is going very well, and I will see you in the next video podcast. Bye.